I think what all of us basically share is the passion for maturing the industry, because the maturity, I think, is the most, speaking abstract, obviously there's technical things and roadmaps and whatnot, but really the industry needs to mature a little bit more to appeal, number one, to mainstream users, but number two, also to institutional investors that want to leverage crypto assets and staking, for example.
We're super excited to have our special session today with the Blockdaemon team and the Metrika team to discuss about Ethereum staking and withdrawals, and then most importantly, show you guys our exciting innovation that we have with our real-time interface and dashboards. So today we have some special guests. We have Freddie, the Ethereum ecosystem lead at Blockdaemon, and we have the co-founder of Metrika, Alex, with us to discuss more about everything that is happening behind the scenes for the second largest ecosystem in crypto, which is Ethereum. And of course, we have our very own Tom with us, our researcher and data scientist, looking into the blockchain data and giving you more insights and clarity about what's going on. So let's get started. First, I want to ask questions to our special guest. And some of the questions that we like to ask after you introduce yourself, of course, is how did you get into crypto? We love to hear your stories. We love to hear what was the hook, what brought you to the space. So Freddie, why don't you get started?
Yeah, sure. Thanks for having me. I'm Freddie. You already introduced me. I'm working for Blockdaemon, and we're the largest institutional infrastructure provider in blockchain. We have a large overlap in our customer cohorts, basically all traditional finance institutions, also large crypto funds and foundations and VCs, all of them. And what brought me into crypto is actually a conversation in 2015 about this crazy thing about to launch, which was Ethereum. And my old friend Peter, he told me that this could make fiat currencies obsolete. And I was like, what is this? Never heard about this. I guess I heard about Bitcoin before, but just as a mentioning, basically. I fell down the rabbit hole and was just learning about the space in nights and weekends. And sometimes my wife complained, like, you can't work during the day and then do crypto at night. So eventually in 2018, I jumped into crypto full-time. And soon thereafter, I co-founded AnyBlock Analytics, which was a data provider, mainly on Ethereum, also Bitcoin, different data APIs. With said Peter that initially told me about it. And so we scaled this up for 3 years, and then we got acquired by Blockdaemon, where I work as an ecosystem lead since December 21. And yeah, excited to be here and excited to chat about all things Ethereum.
Of course, this is an exciting journey. Thank you for sharing. Alex, what about you? We want to hear from you.
Absolutely. It's great to be here. My name is Alex Nathan. I'm a co-founder at Metrika, and here at Metrika, I'm leading our analytics team. Unfortunately, I haven't been in the space as long as Freddie. So I started looking at the space from the sidelines back in 2018. I didn't have a background in cryptography or anything like that. And then in 2019, I got a call from our CEO, Nikos. And Nikos has a long history in the telecommunication space. He was in that industry for a long time. And he said, networks, I know networks, blockchain systems are just another type of network. And he was looking at starting a company and wanted some help with data. So we slowly started working together. And 6 months later, we're working on it full time. We had raised our seed round and would start really building Metrika. And just a quick word about Metrika. Metrika is an operational intelligence and risk management platform for blockchain networks. We're building fundamental tooling and capabilities so that enterprise and financial institutions can really start using and leveraging blockchain networks.
This is wonderful. This is really cool. Tell us more about some of the things that you guys are working on at your firm, because of course we have an exciting partnership between Blockdaemon and Metrika. We actually launched the world's first Ethereum simulator where you guys can see in real time the impact of staking on the Ethereum blockchain, but most importantly, when you have to wait and how much time you have to wait to get your Ether back. And some of the things that really brought us together was giving more clarity to the space. At 21Shares, we provide access to crypto via exchange-traded products, mainly in Europe and in other regions of the world. But the journey really starts with education. But also, most importantly, because of the innovation of blockchain technology, we can provide in real time financial statements and data products that are actually a lot more powerful for people to build their risk models, also understand the impact for their positions and investments. So some of the exciting thing that we have today is to show you guys some of the things that we built together when it comes to basically the Ethereum withdrawal simulator, but most importantly as well, what has been the impact since the Shanghai upgrade. So the Shanghai upgrade, for many of you guys that know, was essentially the liquidity event for Ethereum, when essentially the investors and the stakeholders are now able to withdraw their assets one-on-one instead of basically having a wrapper or basically waiting for an extending period of time without any clarity on when to get their Ether back. So the Shanghai upgrade was definitely one of the key highlights of this year. But to ensure that people understand clearly how the network can maintain the security, basically the entrepreneurs and the developers working on Ethereum actually built some limitations to ensure that basically the network will maintain security and stability there to avoid bank runs and any other black swan events. So Tom, why don't you walk us through the Shanghai upgrade, and I would say as well, the Ethereum limitations that we've seen. Probably it's good that you share your screen and show essentially what we've been working on to unveil to the audience here our amazing tool that we built together with Blockdaemon and Metrika.
Absolutely. So before I show the amazing simulator, I would like to show you our internal dashboard that is public to everyone that we built on Dune Analytics. And this is a tool that we monitor the Ethereum staking state and the Shanghai upgrade as well. So what is the Shanghai upgrade? So Shanghai upgrade is definitely one of the largest and most important event for Ethereum. Previously, in 2020, when Ethereum started allow people to stake their Ethereum on the Beacon chain, during that time, people aren't available for withdrawing the ETH back to the network, not the principal, not the rewards. And therefore, for investors that could be posing a liquidity risk when they stake their Ethereum on the Beacon chain. And as a result, as expected, the Ethereum amount staked on the Beacon chain aren't as large as right now, because after Shanghai upgrade is definitely one of the largest de-risking event. Now the investors no longer need to wait for a long time to withdraw the Ethereum. So according to the statistics right now, we've seen record high inflow. Currently around 24 million Ethereum has been staked on the network, which is worth around $46 billion. And previously, before Shanghai upgrade, which is around, so the Shanghai upgrade happened on the 12th of April. So it is an increase of around 6 million Ethereum. And right now, even though the network has increased in the number of staked, so currently the amount staked on Ethereum is around 20% compared to the circulating supply. However, if we compare it to other proof of stake network like Solana, Avalanche, Polygon, the number of staked ratio is still relatively low. So for Solana, the amount of stake ratio is around 60 to 70%. Cardano is also around 60%. So you can see potentially the staking ratio could go further in the future. And what is so cool about these dashboards is definitely it's real time, and it can provide you with a lot of transparency and more insights of who is staking on the Ethereum. For example, you can view who is the largest staker, which is the largest entity who staked the most Ethereum on the network. And previously, as you may know, SEC is also requiring Kraken to shut down the staking service. And once the Shanghai upgrade happened, you can see the amount of full withdrawals, meaning that the entity withdraw both the principal and the rewards, is mainly coming from Kraken, as you can see here. And therefore, it is very nice that we have the transparency from the blockchain as usual. And one interesting trend that we're seeing as well is previously, before the Shanghai upgrade, we are seeing that the amount of dominance by centralized exchange in the Ethereum staking business is at around 27%, right? But right now, we have seen a dramatic decrease to around 19% right now. This is due to, first of all, the centralization risk and also the regulatory uncertainty right now. And comparatively, we can see liquid staking, which is a form of a bonding mechanism. You provide your Ethereum to these protocols, and then they will give you a bond back. So you can trade this bond on the open market or secondary market to retain the liquidity. So this is definitely a benefit for investors. And as a result, you can see liquid staking as an option has increased in traction tremendously. And after the Shanghai upgrade, as I mentioned earlier, the amount of Ethereum invested in the Beacon chain or staked on the Beacon chain has increased tremendously, and so as the number of validators. So right now, if you can see, the estimated number of validators can go up to 760K But in fact, not all of them are active right now, because if you want to be activated on the Ethereum beacon chain, you might need to go through an activation queue. So after the Shanghai upgrade, we actually see record inflow of number of validators and amount of ETH staked on Ethereum. However, Ethereum has a wonderful mechanism for both activation and exit. So there's a limit for amount of ETH that can be exited every day and amount of ETH that can be activated every day. And let me show you a chart here from Flipside Crypto. As you can see, after the Shanghai upgrade, you can see the activation queue. Activation queue meaning the amount of days that requires for you to wait before your Ethereum get activated to be enabling for you to enjoy the staking rewards. It takes around, at peak, is around 48 days. But thanks to Ethereum mechanism, it is not a rigid protocol. It is dynamic. It will be basing on the demand and supply of the whole network. So since there are a lot of demand for staking, the Ethereum network also lifts up the cap for activation per day or per epoch. So you can see whenever the number of active validators goes up, the activation per day also goes up, so that the estimated number of days required to activating the Ethereum validators also goes down. So previously at peak is around 47 days. So it's really long, but right now it has gone down to 37 days because Ethereum as a network is very dynamic. It will base on the demand and supply to adjust itself.
And Tom, some of the things that I think would be great for the audience is, can you tell us more, why do we have these happening for activating the validators? So validators basically mean when people want to stake onto the Ethereum network with at least 32 Ether. Tell us more why there is this longer period of time that people have to wait for. And then the other thing is, talk more about as well the limitations that we see on the Ethereum network, because there is both the limitations for getting activated and also withdrawing your assets. So tell us more about the rationale and why this is important from an investment case perspective.
So for why people want to stake on Ethereum, or why there is a large demand right now, is because, first of all, the liquidity risk is minimized right now. Yeah. And in the meantime, staking is definitely also a very attractive investment option, or an additional option to earn additional ETH on the network. So right now, the consensus layer APR. So what is consensus layer APR? A bit of background is the staking reward for Ethereum actually comes from three main parts. First of all, it's from issuance. So issuance equals to the consensus layer APR. There is an issuance in the network, which is around 3.37%. And there is also transaction fee and MEV rewards. And MEV is similar to payment for order flow, but it is a little bit more complicated and might be next topic that we can discuss in the future. Essentially, these three main topics are three main categories composite of the staking reward. And compared to just holding your ETH on your wallet, definitely staking is a more attractive option. And why Ethereum is having the activation limit and exit limit is because it is better for Ethereum to maintain its stability. So it limits the number of validators that can go into the network and exit the network, so that the validators can be as usual validating the transactions. And in the meantime, the other parameters wouldn't be affected that much. And therefore, Ethereum has implemented this type of limit for exiting the network as a validator and entering the network to be activated. Ellie, do you have anything to supplement here?
No, this is great. This is great. And the next thing that we want to show here is the web page from Blockdaemon. The first thing that we need to show actually is the Metrika interface. And I think probably here, Alex, why don't you want to walk us through why this is super important to look into these specific interface, and then we're going to show, of course, our Ethereum withdrawal simulator.
Yeah, a few months ago, the Blockdaemon team reached out and they told us they were putting together this website, and they asked for some of the data that we already have on our platform that are available at app.metrika.co. And obviously, as Tom already explained, activation and exit queues are super important when you're trying to figure out how long you have to wait for your validator to either join Beacon Chain or exit. Yeah, this is fairly minimal, but you can see some important statistics when it comes to wait times, and you can see the size of the activation queue. It's pretty big, and I think, at least to me, this was one of the big surprises after Chapella. Like, there were some conjectures before it happened that, oh, once withdrawals are enabled, this is going to open the floodgates and people are going to leave Ethereum. But I think we're seeing an interest in Ethereum that we've never seen before, and the activation queue speaks for itself. And also the exit queue speaks for itself as well, because it's pretty tiny.
Yeah, absolutely. Absolutely. Freddie, you have anything to add?
Yeah, I just wanted to say that basically we reduced it to this because that's the most important factor. On this page, we might see later below, I created a chart that explains the whole activation and exit process. There are several stages to it. And parts of these are dynamic and parts of them are static. But the main variable that people need to look for is this activation queue and exit queue, the dark purple in the chart here. And as Alex was saying, everyone was expecting a large exit queue, which not really happened, but the activation queue is now the thing to watch. And we got a lot of questions around that, which is why I put this together, because it's not as simple as a bonding and unbonding time for staking in some other networks that we support. So we get this, and the withdrawal sweep is also a thing of its own, basically, because it also has variables. And that's where the utility comes from for this number, because we're not only showing how many validators activate, but also what does that mean in terms of days? Because as Tom already explained, there's some variable in the protocol that raises the capacity as more validators comes online. So it's vital for people that are not all that deep and shouldn't be needing to be deep into that to have just a clear amount of days. And that's where it all started. And now you obviously added the great withdrawal simulator that we're going to talk about next.
Yeah, absolutely. Without further ado, Tom, go ahead.
So for example, an investor, they have previously staked some Ethereum on the network, and now they want to withdraw their amount. So they have two options, right? The first one is just to withdraw the rewards. So in this option, you don't need to exit your whole validator set, meaning that you're still validating the network and you're just withdrawing the rewards. So for example, we can say you have Ethereum rewards right now is 0.5 ETH on the network. So let's submit it and see how it goes. And here is the results. So with the withdrawal countdown, the amount of days for partial withdrawal will be 5 days and 14 hours. Since you're just withdrawing your rewards, we will look at partial withdrawals. On the other hand, if we want to exit the whole validator set, meaning that we're withdrawing both the principal and rewards, let's say since the minimum amount of ETH for staking on Ethereum is 32, let's say it's 33 ETH right now. We're withdrawing 33 ETH. And we can see that for full withdrawals, it would take around 6 days and 18 hours. So why is it the difference? Freddie previously showed a really nice chart. And it's because they go through different queues. So first of all, if you are exiting, you will need to go through first the exit queue, and then you have the protocol delay. And then eventually you will go through the withdrawal queue, which is the withdrawal sweep. And it could take usually less than 7 days. And in our case, previously, it is around 6 days and 18 hours. And however, if you just want to receive the rewards, which is the staking rewards, you would just need to go through the withdrawal queue, but without the exit queue and the protocol delay, which is around 4 to 5 days. So this is a really helpful tool for investors, definitely, to measure the time that they require to get back the Ethereum, to better manage the financials and liquidity in the future.
And then the other thing that the investors can see here in front of them is the second row as well, which is the withdrawals request. They can see basically the number of Ether that has been requested for partial withdrawals on the middle side, and then full withdrawals on the right-hand side. And then, of course, on the left-hand side, you have the total withdrawals as well. That basically combines the full withdrawals and the partial withdrawals. And that's very important because at the end of the day, the way the network was designed is to ensure security, decentralization, and stability, right? This is for the first time in history that we see actually a switch in consensus mechanism from proof of work to proof of stake. And it has been basically a long-standing research and development through multiple testing phases for Ethereum to get to where it is today. And that's really some of the early innings of some of the exciting developments that we're going to see down the line, where now people are more comfortable to see Ethereum actually pushing the boundaries to what's possible and actually getting to finally a stage where they have a fully fledged proof of stake network. And there's like a lot of jokes and memes in the industry where people were saying that Ethereum would basically switch to finally the merge, and then of course all of the other things that they have on the roadmap like the Spurge and the Verge, etc., in 2050 or in 2100. But actually we cannot appreciate enough how much time and hours we're putting together to get to a fully fledged proof of work and proof of stake, most importantly now, network that really works and where people are feeling more comfortable to stake. And the fact that there is a higher rate of staking ratio in the network is a testament to the security, is a testament to how comfortable people are with staking and, of course, securing the network and earning the rewards on the back of that. And that's, I think, something that we're going to see more and more with some of the new exciting upgrades and initiatives from Ethereum. And I think it's a good segue to what we want to discuss here. Freddie, for example, is at the Ethereum Community Conference in Paris, and there were some really interesting developments and announcements that came out over the past couple of days already. Freddie, is there anything that the investors here should be looking forward to for anything that comes out of Ethereum?
Yeah, happy to share some news. But before, I wanted to add, because I think it's important for the investors, two other aspects from the merge. You mentioned the memes, and often it takes longer to produce something very valuable than people think. But it did eventually hit, and it was a testament to the consistency of delivery of the Ethereum roadmap, and it very much enforced the trust in the core developers and the whole system, which also gave investors a lot of confidence into it. And that's, I think, part of the reason why we see this active interest, besides the obviously possibility to withdraw now, and that enabled particular institutional investors to now invest in Ethereum and stake in it. And we are obviously, this is our largest proof of stake network where we offer many thousand validators for our customers. But the other part that I wanted to mention as well is that also the issuance went down, because before proof of work, the issuance from the protocol for the work the miners did was a lot higher than proof of stake. Proof of stake is more efficient. It's more secure, actually, and it is also more efficient. So the issuance went down all the way so that this is now deflationary. And Ultrasound Money, for example, is a great website to watch that, or there's probably Dune dashboards as well. So I think we're currently at about 0.1% deflation. I think it's even higher if you look at the whole year. So it depends on the amount of gas fees and things like that. But that's, yeah, you see the drop in issuance there. So I think from the investment perspective of ETH, the crypto asset, is worth mentioning. And then maybe because you asked on latest trends in Paris at the Ethereum CC conference, there's a lot of announcements, like all major teams, I guess, have had an announcement. But one of the technological trends is account abstraction, which basically will make the usability much easier for a user, not so much for the investors. But obviously, as the whole network gains adoption, that's important for the protocol. And the ultimate goal, I guess most people would say, so to onboard the next billion of users and the next million developers, as Coinbase is saying with Base, it needs to get more easy, and account abstraction is one way to do that. And it fits well with our institutional wallet, MPC wallet, that the Blockdaemon is developing. But the other part is also layer 2 scaling options that are available. Like, I think I've seen 2 or 3 announcements actually where either new layer 2s are launched or are going to be launched, particularly in the ZK EVM space. That could be another topic. I don't want to go too deep into it. But also other layer 1s like Chainlink rolling up into as an L2 on Ethereum. I think this is a great testament that we might see actually a reduction in layer 1 blockchains, but they will build up on Ethereum as the most secure settlement layer and blockchain there is.
Yeah, absolutely. Alex, Tom, any upgrades, updates, developments, innovations that you guys are super excited about?
Yeah, to be honest, I also had those exact same 2 developments that as a team we've been looking at. Obviously, the next big hard fork is the 𝕋𝕚𝕚𝕖 Cancun one, which is all about scalability, and layer 2s are going to be in the spotlight. And the other big one that we're looking at as a team is account abstraction. So this one is more about user friendliness in a sense. And I think both user friendliness and scalability are important if we want to be talking about mass adoption. And obviously, in terms of data, both of these developments, there's going to be a lot of new data to be collected and analyzed. new entities. So for account abstractions, there's new entities like bundlers and paymasters that we don't know exactly how they're going to be working and how they're going to be performing down the road. So all kinds of interesting new data sources. So I think there's going to be data analytics is going to be in the spotlight and will shed light into all the new dynamics that are going to be formed.
Couldn't agree more. I think, Tom, this is one of the good segues to what you wanted to present as well.
I would like to share the upcoming upgrade, as Alex mentioned, which is the Cancun upgrade. In the most important proposal, EIP 4844 is definitely the most anticipated one. Proto-dank sharding will enable a new type of transaction, which is called blob. So essentially, what it will enable is for layer 2s. Previously, they will need to compete with other normal transactions in the fee market directly, so that they will need to pay the same fee as the normal transactions. But now, with the introduction of the blob data, it is similar to witness data on Bitcoin. So essentially, it will tremendously reduce the layer 2 fee for rolling up their data back to Ethereum. And right now, we're seeing, as Freddie mentioned, there are a lot of layer 2s announcing the mainnet, Linear, Mantle, and we are also seeing application-specific rollups, and even like entities or institutions are entering to the layer 2 space. As we have seen, Visa has collaborated with Gnosis Pay to launch the payment option on the layer 2, which is using Polygon 2.0. And in the meantime, we also previously already seen that Reddit is already launching their avatar or the moon coin on Arbitrum Nova. So it's also a testament to institution rushing into the layer 2 space as well. And not only the crypto native people, because why Ethereum requires layer 2 is, of course, as we all know, Ethereum is quite expensive. For an NFT transaction, for example, it could take $10 to execute a transaction. However, on layer 2, it's much cheaper. It could take like less than $1. But with the implementation of EIP 4844, it could tremendously go down even further to help people easier to onboard to the network. And Alex mentioned the account abstraction paymaster. I saw that Visa is already experimenting this function directly on the Gurley testnet. So it's a testament that these payment networks is already seeing that blockchain is an opportunity to help them to onboard more users. For example, what Paymaster do is, for example, if you do a transaction on Ethereum mainnet, it requires you to pay ETH as a gas fee. But with Paymaster, you can pay any token that you want as a gas fee. So to a user, you don't need to acquire a lot of different native token to pay the gas fee. It's much better user experience than before. Account abstraction, definitely a very exciting space we'll keep looking into, and excited to see how it evolves in the next bull market, definitely.
And then there are also like some interesting developments coming out of Uniswap as well. So Uniswap, the largest centralized exchange, they recently announced Uniswap X that would enable now people like you and I guys to pay no transaction fees on DEXs. So the transaction fee is going to be abstracted away within the price that we pay on the DEX. And basically the validators of the transactions in the mempool, or called fillers, are going to basically pay the transaction costs across chains. And I think that's one of the ways as well to onboard a lot of people into crypto without having exposure to, for example, the gas fee payment token, which is Ether for Ethereum, Polygon or Pol actually very soon for Polygon, and other chains as well. I think that experience is going to provide more comfort for many people as well that want to have exposure to some of these assets across DEXs and lending marketplaces as well. So I would definitely expect more and more of these like primitives to be adopted across dApps, adopted across hyperchains and layer 2s and layer 1s as well, because it makes a ton of sense, especially when now we're seeing that there's a lot of interoperability initiatives across layer 2s as well. And some people are talking already about layer 3s, right? I would say user experiences with account abstractions, but also like how people pay the gas fees and the interoperability of applications across chains or layer 2s is going to be, I think, some of the exciting developments that we're going to see finally the fruits from the tree going forward. It's going to take some time as well to be more efficient and more scalable too, but these are some of the exciting things that we're seeing for sure. Let's get to the questions from the audience. I have one for one of you guys, if you can answer this question. Can one of you walk us through what's CCIP from Chainlink? It seems to be a big thing. They just announced their new protocol. So Chainlink, for the reference to the audience, is essentially a price feed provider that connects off-chain data like price feeds or weather data to the blockchains, because by design, blockchains cannot connect with any third-party or traditional financial systems or any other infrastructure. So basically, Chainlink is building that tunnel of connection between crypto and the real world. But they just announced CCIP, finally live. Anyone who wants to chime in, provide more clarity to the audience, why this is a big deal? Interoperability is definitely a big theme as well in crypto when it comes to how do you transfer assets across chains, from like one bank to the other, when we talk about tokenization and all the things that we're seeing today, where two banks are using, for example, like two different chains to tokenize fixed income or stocks or any other real world assets. Why this is a big deal? Anyone wants to chime in?
Yeah, I can take that. We're also a Chainlink node operator.
Nice.
For quite a long time, actually. You described it well. It is in the blockchain space, it's called the Oracle problem. So to get anything off-chain data on-chain. And price feeds are the most prominent example, obviously. The weather data is obviously also a very famous example for, let's say, insurance products on blockchain, et cetera, like that. But really, like you also mentioned, it's also like off-chain is also not on the blockchain that is actually doing it. So if Ethereum wants to see if something happened on a Cosmos chain or even on a Gnosis chain or some other sidechain or Polygon, it also needs an oracle, and it's just getting it from a different blockchain. And basically, CCIP is a way to bridge assets and information from one blockchain to another. Now, there is obviously already a lot of bridges out there, but as you've all aware, probably there's also a lot of hacks and security issues that happen around that of different causes, and I don't want to go into it, but usually it is large honeypots of money sitting there and just waiting for hackers basically to take their bait. What Chainlink has done is basically a very high level. It uses its existing node operator Oracle operators to secure the transfer. It's basically a bridge powered by the Oracle network of Chainlink node operators, which makes it very decentralized, the most decentralized one. It's also very much trusted because basically all of DeFi depend on Chainlink oracles. So I think this is very exciting for the bridging and interoperability potential, because as we've seen, and it doesn't matter if it's L2, L1, but we are going to see a continuous explosion of new blockchains. And because then liquidity fragments and users have to transfer their tokens around and things like that. So this interoperability solutions, and for us, having over 60 blockchains that we support, obviously we're natively cross-chain basically. So this whole interop communications and value transfer are very important for us as well. Basically, it's a new form of bridging or securing a bridge, basically. And that's what makes this exciting, because it is so important to the whole ecosystem. And Chainlink puts all its weight and credibility behind it. So that's why it's very exciting.
It is super exciting. Does that tie as well to some of the things that you guys can talk about for your roadmap? Is there anything that you want to share to the audience for Blockdaemon and Metrika that you guys are super excited about for how this is going to evolve, shaping your roadmap for any of these upgrades and new innovation?
Yep, happy to talk a little bit about that. I guess before getting to what is on our roadmap, just want to say a couple of words as to the why these things are on our roadmap. Basically, our position at Metrika is that traditional risk management for financial institutions doesn't quite translate to the Web3 world for a number of reasons. For instance, blockchain networks don't come with service level assurances. There's not a single accountable organization that if there's something wrong with the network, you can call them up and say, hey, there's something wrong here. There's no 24/7 support. There's no such thing as SOC 2 compliance for blockchain networks. And the list goes on. What we're doing at Metrika is we're building a risk management and compliance platform that can let financial institutions really leverage public blockchains and at the same time be able to satisfy the long list of regulatory and compliance requirements that they have. Just to give you an example, and Freddie was actually one of our alpha users, but we launched an Ethereum OFAC staking compliance module that any entity that wishes to be compliant with OFAC, they can upload their validators, they can monitor what happens on every block that they propose, they can be alerted, they can export all the blocks with potentially non-compliant transactions. This is a good example of what it means for a financial institution to be compliant when using blockchain technology. On our platform, what we let our users do is define custom key risk indicators that they wish to monitor. For instance, they might want to monitor the decentralization of the network, or they might want to monitor how fast transactions are processed, and so on. And we let them define custom alerts and be notified when there's potential issues with the network. Now, in terms of the things that are on our roadmap, we're always looking to be adding new data feeds to our platform. So we recently, for instance, announced a node agent that right now is compatible with the Flow and Solana networks. And basically, the node agent is just a piece of software that runs alongside a node or a validator and collects all kinds of either blockchain specific or just machine level metrics. And on the risk platform side of things, we're building new features like allowing our end users to visualize whatever key risk indicator they wish to visualize and create their own dashboards, and even have more advanced analytics where if they want to set an alert, instead of having to say, this is my threshold, we have anomaly detection and forecasting that can help them with that. Yeah, that's more or less what we're currently working on.
This is a pretty exciting roadmap. And I think risk has been for a long time in crypto pretty much underrated when it comes to how this is integrated into people's portfolio strategies, looking into implementing new technologies, etc. So super excited to see the results of that for sure. Freddie, what about you?
I think what all of us basically share is the passion for maturing the industry, because the maturity, I think, is the most, speaking abstract, obviously there's technical things and roadmaps and whatnot, but really the industry needs to mature a little bit more to appeal, number one, to mainstream users, but number two, also to institutional investors that want to leverage crypto assets and staking, for example. And we need the tools, and we're actually using Metrika tools as part of our monitoring of our fleets of thousands of validators. So that's important. The compliance aspect is obviously important. And basically what we at Blockdaemon do, we give institutions this seamless, secure, and efficient Web3 services, being it nodes, if they need a blockchain node on any of those 60 protocols, if they need data, we have a Ubiquity data API that is also making those different blockchains be standardized in a universal way, so that eliminates a lot of friction for them to build on blockchain or on different blockchains in particular. We have the staking, obviously, on many different blockchain networks, and that includes, obviously, the reporting. Like for our customers, it's almost as important to see the results and get the rewards in an actionable fashion than to do the staking and themselves, right? So that's the difference between an institutional investor and a retail investor, maybe. So that's part of that. And then also we have the institutional wallet, which is our latest announcements. And we do expect a lot of uptick in the needs there because everyone was shocked with FTX, and our MPC technology allows people to self-custody, institutions to self-custody. And I think that's a very powerful narrative to have since we're delivering it all in one, basically. That's what we call it. We power the blockchain economy with one seamless integration, basically. And we'll continue to build and add those new networks, be it layer 2 or other networks. So yeah, the work never stops, but that's exciting, right? That's what we're all here for.
It is, absolutely. And I think sometimes we don't realize, despite the fact that the crypto industry is like 14 years old, starting with Bitcoin, we're still early. We only have 200 to 300 million people that have access to crypto out of like 4 billion people that do have access to the internet, because you need to have the internet to have access to crypto anyway. So this is still early. We haven't crossed the chasm of 500 million people and then 1 billion people. So we have a lot to do, but we're super excited to help each of you guys in the audience and the wider industry to have access to data products at your fingertips, to really understand better this asset class, of course, education and initiatives like this one for this webinar. So we're super excited about that. And we're already at time. So I want to thank everyone here. First, the panelists, Alex and Freddie. That was amazing. Thank you so much for your time here. Tom as well. Thank you for the insights, and for the rest of the audience as well. I have one last question. Alex and Freddie, where can we find you guys on social media, and how can we find you guys as well for your respective companies? Who wants to start?
I can go first. So if anybody's currently at ETHCC, we have a few members of our team who are there. You can meet them in person. Social media, where you can find us on Twitter at Metrika Co, and on our website, metrika.co. And you can always visit our platform at app.metrika.co. We're also on Discord. There is links on our platform on Discord. So yeah, feel free to reach out.
Wonderful.
And same for me. I'm in Paris. A couple other Blockdaemons are also in Paris. I'm reasonably active on Twitter. It's _crypto_crack for me personally. At Blockdaemon HQ is the Twitter handle of Blockdaemon, but most easy is probably blockdaemon.com, and you find all the links to YouTube, Twitter, and the rest. Yeah, check us out.
This is wonderful. And after this call for the audience, you're going to receive all the necessary links to follow Alex and Freddie for their amazing work. You're going to have a link to our interface as well for Metrika and the Blockdaemon and 21 shares Ethereum withdrawals simulator. We hope you enjoyed the session. The session is going to be also live on our YouTube channel. Stay tuned for that. If you have any questions to the team, feel free to reach out to us, the research team at 21 shares. We want to thank you so much for your time, and we're going to see you next time. Freddie, Alex, Tom, that was wonderful. Thank you so much, guys.
Thank you.
Thanks for having us.
All right. Thank you. Bye-bye.